Thanks, Mr. Chairman. Our first question is from a teacher in the Richmond district who is with us today in the boardroom. Would you please introduce yourself and ask your question?
I'm Robert Handy from Butler High School in Harford County, Maryland. What has been the greatest success as well as the greatest failure of the Federal Reserve in the last 100 years? And if you were teaching a high school U.S. history class today, what is the most important aspect of the Federal Reserve's role in history you would want students to understand?
Well, I hope that your students, if they come through civics or history, that they learn about the Federal Reserve. It's a very, very important institution. It's had a huge impact in the we're about to our 100-year anniversary, about to celebrate our centennial. The Federal Reserve was founded in 1913. And it's been a tremendous, as I said, a tremendous part of U.S. economic history. I would say the greatest failure, to start there, is no doubt the Great Depression of the 1930s, to which the Federal Reserve made, unfortunately, an important contribution. The Fed was very slow to expand the money supply during the Great Depression. As a result, it countenanced a severe deflation or falling prices during the early 1930s. The Fed was also insufficiently proactive in trying to stabilize the financial system. As you probably know, about a third of all the banks in the United States failed during the 1930s, a tremendous collapse of our banking system. And those two things together were very important in making the Depression as deep and as long as it was. By the way, as we dealt with the financial crisis in 2008 and 2009, we tried to take those lessons to heart. We tried to make sure that monetary policy was aggressive to prevent deflation, and we tried to take whatever steps were necessary to keep our banking system from collapsing. So at least we tried to learn from history. I think one of the most, or probably the most important success of the Federal Reserve in the past century was probably after the period of the 70s when we had a lot of inflation. The Federal Reserve under Chairman Paul Volcker brought down inflation, conquered inflation, and we now have very, very low inflation, very stable prices. And in that process, in the 80s and the 90s, achieved quite a bit of prosperity and economic growth in the United States, and was a very, very important contribution to that period. Going forward, I think students should understand those two elements of what the Fed has done and hasn't done. And the first is financial stability. It's very important for the Fed to contribute to keeping our financial system stable and productive. And secondly, price stability. Only the central bank can affect inflation, and keeping inflation low and stable is good for our economy, and it's a very important responsibility for the Fed.
Thank you.
Yeah.